Hey everybody, Ross Gibbons here with the Insider Report. I want to tell you about a special investment opportunity I've just discovered that I'm letting my Insider Report members on right now. Now, the stock has just undergone what's known as a reverse stock split. I want to tell you what this is and how it can make investors like you and me a lot of money. Now, take a look at the chart. This is the stock we're focusing on. As a small cap, was a penny stock as of about a week ago. Now, right in July, middle of July, the stock really started picking up. Notice it was just chopping around between 10 and call it 15 cents. Then activity started picking up when news of what's going on with this company happened. It ramped up from 10, 12 cents to 40, 50, 60 cents. But after this reverse split, the stock is now trading for around $19. So what is a reverse split? Well, most of you are familiar with traditional stock splits. When a price gets really, really high, like take a stock such as Amazon, it's $3,000 plus per share, or Apple that was up at $700 per share. When it gets very, very high, they'll often do a split to get the price down. So let's say a stock's worth $500 a share. They do a 5-for-1 split. Now instead of owning one share worth $500, you own 5 shares for $100 each. It doesn't change the value of that company, but it's generally seen as a bullish sign. And most stocks that have generated huge returns over decades. You look at Microsoft, you look at Apple, you look at Google. Those type stocks have had several stock splits over many, many years. But this is the reverse. It is just underwent what's known as a 50-to-1 reverse stock split. So for every 50 shares you had at, say, 50 cents a piece, you now own one share worth $25 a piece. Again, the value is the same, but you now have far less shares. So why would they do that? Why would a company intentionally raise the price per share and cut down the number outstanding? Well, here's the answer. This company just went through a $42 million private placement. Now, if you're not familiar, a private placement is when a company sells a piece of it. So it sells stock directly to an outside investor. So let's say you or I wanted to build a position in this stock. We want to invest $5,000 or $50,000 or even $500,000. We can do that on the stock market. However, with a little company like this worth around $160, $170 million, if you want to buy $42 million worth, in other words, a quarter of that company, you can't do that in a brokerage account. The stock will go through the roof. There's not that many shares outstanding for sale, so you go direct to the company and buy from them. Now, here's the exciting part. One of the contingencies of this deal was that they do this reverse stock split for, here's the important part, a pending uplisting to the NASDAQ exchange. Now, as I said, this was a penny stock. It was trading for 10, 20, 30, 40 cents a share. It trades over the counter on the pink sheets, meaning it's not a New York Stock Exchange, not a NASDAQ exchange. And the thing about stocks like that is the big guys can't own them, all right? If you are Merrill Lynch, if you run a hedge fund or a mutual fund, or even if you're just a neighborhood financial advisor who handles, maybe your personal investment plan, they are generally forbidden from owning penny stocks and especially unlisted or pink sheet stocks. They're seen as too risky. However, once that stock lands on the NASDAQ exchange, it is now somewhat stamped with an approval of safety. It is on a leading exchange. And as dumb as it sounds, investor fear is lessened when you're looking at a stock that's worth $20 per share versus a stock that's worth 20 cents per share. One seems very risky, one seems much safer. And that's extremely important in the stock market because once a stock is now somewhat approved for trading and the big funds, the mutual funds, the endowments, the pension funds, the hedge funds, once they can buy it, now we've got a whole new wave of buyers coming in. These penny stocks have been trading by you and me and the kids on Robinhood and people with, 6, maybe 7-figure accounts. All of a sudden, those with 8, 9, 10-figure accounts can start buying. That's when the institutional dollars come in, the big volume, the folks who really move stocks. When they get into a company like this, it can easily run 100, 200, 300% or more in a very short amount of time simply from the additional buying pressure and from those large institutional players stepping in. Now, it hasn't been listed to the NASDAQ exchange yet. That's why I say this opportunity is still pending. But according to the terms of the deal, they're simply calling for a near-term uplisting to the NASDAQ. Now, the good news is the move to the NASDAQ exchange has not yet happened. The terms of the deal, it already received the $42 million private placement money, but the terms just called for a near-term uplisting to the NASDAQ exchange. That likely means it's going to happen in the next couple of weeks or by the end of the year, I would assume at the latest. But it could happen any day. The price is already up where it needs to be. All the other requirements now being met. So it's simply a process of putting in the application, NASDAQ approving it, and then the stock moving to that exchange. And once that happens, once again, you're going to have large institutional buying that will likely push this stock much, much, much higher. And this is one of those opportunities designed for small retail traders like us. Because as I said, the big guys cannot buy this stock right now. They know that when it hits the NASDAQ exchange, the price is going to go higher, but they can't buy it because of all the rules I talked about earlier. It is a penny stock. It is light volume. They're forbidden from trading these stocks. So this is an opportunity designed for regular folks just like you and just like me. So if you want to learn more about this stock, all the details of the trade, why I like it, along with all the other open positions we're in, stocks like Cardalytics, it's up over 100% so we bought it earlier this year. Matador Resources up 148% just in the last 6 months since we recommended it to our members. We're up 112% on LQDT in less than 3 months. We have a 50% open gain on Traycon Pharmaceuticals, a stock we just bought last month. Again, all these are stock gains. The gains on the options are several times beyond this. You want to learn all about these and the stocks we're recommending over the coming months and over the coming year, you need to become a member of the Insider Report. Now, if you're not yet familiar with what we do, we track the buying of corporate insiders and piggyback their trades to explosive wins. I'm talking about knowing when the CEO, the CFO, the chairman of the board of directors, knowing when they're buying their own company stock with their own money, knowing within 48 hours when they do that, and simply following their moves, following the people who know that company best. And that's what we do with the Insider Report. Has led to some outstanding gains, and I want them to be something you can enjoy. I want you to be a part of our small group of serious investors that are making consistent profits using this strategy. So there should be a link to a video below this. Go ahead and check that out if you've not already done so. Watch my free trading video. I'm going to show you the ins and outs of my methodology, how I find these stocks, how to identify the best signals, when to get in, when to get out, what to look for, what to avoid, more important than anything else. All of the rules I follow and all the things that have taken me more than 10 years to learn, I'm going to shorten your curve and give you all the secrets that I spent a decade accumulating. So go ahead right now, watch that video, learn about insider trading, become a member of the Insider Report. I promise you will not regret it.